Imagine this, you're sitting at your desk, scrolling through the news, and suddenly you see a headline that makes your heart race. Geopolitical tensions could tank the stock market. Wait, but isn't the S&P 500 just hitting a record high? What gives? Let me tell you, folks, the markets are like a roller coaster right now, and the latest twist involves a tiny waterway in the Persian Gulf called the Strait of Hormuz. Now, I know what you're thinking, why should a narrow strait matter to your 401k? Well, buckle up, because this is about to get interesting. Here's the thing. The US and Iran were supposedly on the brink of a deal to reopen this critical shipping lane, which handles 20% of the world's oil. But then, out of nowhere, Iran says, not happening. And suddenly, oil prices jump 1%, pushing WTI above $79 a barrel. Now, I'm not a geopolitical analyst, but this feels like a game of chess where both sides are playing with their fingers crossed. Why? Because if this deal falls apart, it's not just about oil, it's about sending a message. And messages in the Middle East rarely come without consequences. But wait, there's more. Let's talk about the Federal Reserve. Just last week, the market was buzzing with hope that the Fed might pause its rate hikes after a surprisingly weak jobs report. Suddenly, the odds of a September rate increase dropped from 67% to 44%. That's a massive shift. Now, I've always said the Fed is like a tightrope walker, too much stimulus and you get inflation, too little and you crash the economy. But here's the kicker, the jobs report showed fewer people working. That's not just a number, that's a sign of something deeper. Are we seeing the beginning of a labor market slowdown, or is this just a blip? And if it's the former, how does that play into the Fed's playbook? Now, let's zoom out. Investors are also keeping a close eye on inflation data this week. Because here's the truth, inflation isn't just about the price of groceries, it's about the entire economic ecosystem. If we see a spike, it could reignite fears of another rate hike, which would crush growth stocks. But if it stays tame, maybe the Fed can finally take a breath. And yet, I can't help but wonder, what if the real problem isn't inflation at all? What if it's the uncertainty itself? Because when markets are this jittery, it's not just about numbers. It's about trust. And trust, my friends, is the most fragile commodity of all. So here's the question that's been gnawing at me. Are we witnessing the dawn of a new era where geopolitical risks and economic data are in a constant tug-of-war? Or is this just another chapter in the endless cycle of market volatility? Either way, one thing is clear, this isn't just about stocks. It's about the future of global trade, the stability of energy prices, and the delicate balance that keeps our economy from collapsing under its own weight. And as someone who's watched markets ebb and flow for years, I can't help but feel like we're standing at the edge of something huge. What do you think? Is this the calm before the storm, or just another ripple in the ocean of uncertainty?